Should you be buying gold bars? Are gold bullion bars a good investment, or should you consider other investment vehicles to consider putting your hard-earned cash into? Okay, so let's get straight to the start of this episode. Now, I want to say a huge thank you to Tavex Bullion. They once again have sent me some amazing goods to be able to review here on Future Investments, and one of those is this absolutely stunning 20 gram PAMP Swiss Gold Bar. It's an absolute whopper of a precious metal, something that we don't often get to see here on YouTube because it's such a valuable piece that is rather difficult to be able to invest in purely by its price point. Now, it got me thinking when this arrived. I had a little look at it and I thought, God, that really is an absolutely stunning piece. But how does it compare to the rest of gold bars? Are they a good investment? And maybe it made me think, what gold bar is the better investment? What's more suitable for me personally? Well, firstly, I've got to say this 20 gram gold bar is absolutely stunning, and I think Tavex have done a wonderful job sending this to me for review. It's such a beautiful piece, and it's going to give a great opportunity to compare it to some other bars. Now, talking about other bars, what other pieces have I got here that I can talk about as well? We've got a plethora of multitude of bars. In the back here, we've got a 1 gram gold Tavex bar, which is a personal favorite of mine. It's one of the most affordable 1 gram gold bars out there on the market today, in which you can buy brand new at a very affordable and competitive price. Not to mention that the design and the packaging is equally as stunning as the gold bar itself. This for me is a very nice bar that I like to invest my capital into on a, let's say, dollar cost averaging basis. You know, maybe one of these at the same time every single month. You don't see a massive change to your stack, being that it's only a 1 gram gold bar. It's not a huge increase in your personal net wealth of preservation in regards to your capital. But over time, due to compounding, the use of the compound effect, you really do see a large difference in your stack by adding additional bullion to it on a regular basis. That's why I really like those 1 gram gold bars. But for me, I also have 5 gram gold bars. They're a very nice investment because they're a real happy medium when it comes to that level of price point. Some people will argue that, you know, 1 gram gold bars are high on that premium side and maybe not the best investment to preserve your wealth. I always like to argue the fact that, you know, we're talking in a world of finance here where most of us have done quite well with our finances, but in the realistic world, when people especially looking to start investing, whether it's in index funds, property, or precious metals or commodities, not everyone can afford to go in and get a 5 gram, a 20 gram, or, you know, a 1 ounce gold bar. So 1 gram gold bars for me have a little bit of a sweet spot for that new investor that's allowing them to start their journey. However, if you're a bit more experienced, maybe you're a bit more confident, maybe you've got a little bit more capital to invest in, something like this Royal Mint 5 gram Britannia gold bar could potentially be a good investment for you. It's a very nice spot in regards to those fractional premiums. You're not getting absolutely hammered on those premiums, and also you're not paying those big prices like you might do with, say, this 20 gram PAMP bar in the background here. However, having said that, you know, it's not capital gains tax exempt. None of these gold bars here are capital gains tax exempt, at least in the United Kingdom. It may be different for the country you're currently investing in. However, yeah, I still think, you know, gold is gold and it's a wealth preservation device, and we shouldn't get too caught up on the fact that, you know, yes, you're going to pay, you know, capital gains tax when you do one day sell these investments, but, you know, you could be spending money on other things, takeaways, things that aren't going to appreciate, liabilities essentially that aren't going to not only preserve your wealth but increase your wealth. And on that topic, I do like to always bring up the fact that, you know, some people sometimes say that, you know, why invest in gold? It's such a stale, old-fashioned investment. And I can understand how it can be seen as a more traditional investment when comparing it to something like cryptocurrencies that's in a more modern society. But for me, gold is such a safe investment. I use it as the backbone investment of my portfolio. In fact, when I do purchase gold bullion, whenever that may be, whether it's a 1 gram gold bar or a 1 ounce golden Britannia, I don't actually feel like I'm spending money. I honestly feel like I'm transferring capital into an asset that is going to protect my wealth and hedge against inflation. Yes, it's not going to pay me any dividends or passive income, but it is going to look after my finances. And a way I like to describe that is, in a simple term, gold is not going to make you rich, but it certainly will keep you rich. At least going by historical data and the belief that you think yourself, gold will continue to increase averagely year by year. As we look at the analytics of gold, it's performed very, very well from the year 2000 to 2020, increasing over 600% in value, an astronomical figure, which you must consider is pretty good for an investment that is what might be considered a low risk investment. Something to mention though is that we know gold is a long-term investment. You're not going to make particularly any gains overnight. Whether you're buying a 1 gram gold bar or a 1 ounce golden Britannia, maybe even a sovereign, it's definitely a long-term investment. And if you're buying direct from bullion dealers, you have to bear in mind that whether you're buying capital gains tax exempt pieces like maybe a 1/4 ounce golden Britannia or any coin minted from the Royal Mint, you are still going to get caught on some of those premiums when buying direct from bullion dealers. So that therefore shows, you need to hold that asset a little bit longer than maybe if you were to buy it on the second-hand market, because you're going to get a much better price point for your purchase. But of course, with that comes the risk of buying potentially fake bullion or not maybe getting the exact piece you wanted for the right price, or the quality may not be as you expected. Something to mention with that is, when we're talking about fakes and the quality, when you're not buying direct from bullion dealers, bars, are they regularly faked? Is there something to be worried about regarding that topic? Well, not really. I don't think so. In my personal experience, I've been investing in commodities for quite a few years now, and I've not really had any big scares. But I will say, if there was one particular brand in particular that you needed to worry about, I would say out of all of them, it would probably be PAMP Swiss. They're globally, if not probably one of the most worldly known brands for minting gold bullion, and therefore that has led to a lot of fakes being minted into the market. I think you should stay away from sources like maybe eBay or less regulated sellers that aren't a specific bullion dealer. Now, having said all of this, in final conclusion, should you buy gold bars? Are they a good investment? Or should you stick to maybe pieces like coins? Well, for me, I love bars. I think they're synonymous with that gold feel. I think in movies, it's always gold bars, not gold coins. It gives that real feel of substantialness when it comes to the yellow metal. They are also cheaper traditionally than coins, as they have lower minting costs. However, for me, as a generic weight stacker who is very much focused on trying to get the best value of price for my investment, I tend to go for capital gains tax exempt gold coins minted from the Royal Mint, like Britannias. You could also go for sovereigns. The reason for that is because I want to avoid tax upon my sale. Now, something to mention is you only pay tax on that sale when you cross that capital gains tax threshold amount. So for anything right now that is below, an ounce, you can pretty much guarantee that you're going to be able to avoid that capital gains tax fee. However, I'm looking beyond that into the long term, into 10, 20 years from now, and I'm trying to cover myself. Do I want to be paying tax on fractional pieces when maybe the threshold has been lowered? Definitely not. So I want to be getting ahead of the curve in that sense by investing in capital gains tax exempt pieces like Britannias or sovereigns. Nonetheless, you can see that I still do own gold bars, so I don't completely write them off. I think they're a good long-term investment, a fantastic wealth preservation device, and I think it's just something that's really nice to have in your investment portfolio. As we always say, diversification is key, so I believe if you're mixing it up with coins and bars, you can't really go wrong either way, but it always does come down to personal preference as well. It really depends on what your investment goals and financial circumstances are. So don't let me change your opinion, but I would like to know in the comment section what you think. Do you prefer gold bars, or do you prefer gold coins? And a big shout out to Tavex Bullion for sending me that stunning 20 gram Lady Fortuna PAMP Swiss Gold Bar. Very, very kind of you, and I very much appreciate it. Until next time, I'll see you all in the very next episode. Thanks for watching. Bye-bye.